Well, you either love it or hate it. Either way, you need to deal with it. Tax time is almost upon us. Let's see who the Australian Tax Office has in the crosshairs this year with our finance expert, Michelle Maynard from Carbon Group. Hi, Michelle.
Hi, Mon.
The ATO is telling Australians not to rush to file their tax returns this year. Why?
Basically, the ATO gets a lot of information from different sources. So our employer will report what they've paid us this year, your private health insurance details go up, bank reports interest and companies report their dividends. So that all takes a little bit of time. And what the ATO is saying is wait until the end of July to lodge your tax return to make sure all the information is in there. A lot of people rush and they miss out on those small things, which means the ATO has to go back and amend your return and you'll have to pay back some of the tax refund that you get.
They rush because they want their refund as fast as they can get it. There's also a cash windfall for some when they do their tax. What's this about?
So this year's actually going to be a great year for refunds, which isn't going to help the message about not lodging early because people are going to want their hands on that money. And that comes from two things. There's the low to middle income tax offset, which is the $1,080 for those between $37,000 and $90,000. For those that earn more than $90,000 up to $126,000, they get a smaller part of the $1,080. So we're getting that again this year. It is meant to be the last year that it's on, but the rumblings from Josh Frydenberg today is that in the budget they may keep it for a couple more years. Couple that with during COVID they announced that the tax cuts that were meant to start on 1 July this year were actually backdated. So we've been overtaxed a little bit because of that backdating, and we're going to get this $1,080 refund. So most people should see a quite nice return from the ATO this year.
So that applies to everyone who falls within that tax bracket?
It does.
Okay, well, finally, Michelle, who and what is the ATO targeting this year?
You would like to think they would look at the big end of town, but they've come out and said individuals are in their crosshairs again this year, and that's because they estimate they lose around $8 billion a year from us either not declaring income or overclaiming expenses. So they've picked three key areas that they're going to be watching very closely. The first one is work-related deductions. So if you claim anything in relation to your work, you need to make sure that you weren't reimbursed by your employer, that you actually incurred the expense, and lastly, that you have receipts to back that up. Next, they're looking at rental properties. They've said that they're going to make sure that you include all of your rental income, which will be interesting this year because of the rent moratorium. Some people didn't get rental income for a period, and to make sure that we don't push any personal expenses through our rental property. Lastly, the buzzword cryptocurrency. The ATO has a lot of information about cryptocurrency, and a lot of people don't realise when you sell it, you actually incur capital gains tax. So they said that they're going to be focused on cryptocurrency, shares and property. The ATO gets reports of when that is all sold, and they're going to be matching that with your tax return to make sure that you include that gain and therefore pay any appropriate tax.
Thanks, Michelle. Until next time.
Thanks, Mon.